Good afternoon, everyone. Good morning. For those of you joining from Europe, my name is Paolo Casamassima. I'm the CEO of MEIRA, Middle East Investor Relations Association. It's my pleasure to welcome you to our seventh online session of the MEIRA IR Academy. This is our new initiative that we've launched this year to provide you more value as members. The Academy is created to cater for members at any level of their IR journey, from the more junior to the most senior, like Mohammed Abdal. So thank you for joining us, Mohammed. Mohammed is also one of our board members at MEIRA. The calendar has over 40 topics running throughout the year. We run events pretty much every Wednesday at 12:30 Dubai time, therefore 11:30 for some of the GCC region. And the idea is to create consistency. So you remember that every Wednesday we have a session. Before I introduce you, I think I want to once again celebrate our milestone. 200 members reached, almost a 50% growth year on year. Thank you, all of you, for the support in the last year and a half. Salwa and Michael, you are new members. I hope you're enjoying being part of our community. And for those of you that have been with us for a few years, thank you for staying loyal to MEIRA. Now, it's my pleasure to introduce you to today's topic: investment approach and challenges for GCC corporates. Key points that we will cover today in this workshop: understanding the investor landscape, investor targeting, how to use the data to find and engage the right investors, and then tailor the correct engagement strategy, overcoming challenges in investor communication, and expanding investor reach beyond the region. We have 4 speakers today, so that's amazing that we have 4 different talented individuals from the region and with international experience. Michael Roper and Mansoor Elahi, both from Irwin, new member and also recently sponsor of our iftar events in Dubai and Abu Dhabi. Thank you again for that sponsorship. Salwa Gradl, Director of Investor Relations at Do, telecom provider based in Dubai. And Salwa has international experience, having been previously held a investor relation manager role at Airbus in Europe. And Shahroz Hussain has also international experience, and he has recently joined Instinctif, previously being based in Toronto, Canada. So here you have very international experience, senior speakers. The room is all yours. I hope you all enjoy. Just to make sure everything is clear, you can ask questions in the chat, or you can just interrupt the speakers. They will go through the presentation for roughly 45 minutes, and then there will be a Q&A for the last 15 minutes. Thank you very much.
Thank you, Paolo. And just to reiterate what everyone said, congratulations on the 200 members. And we're privileged to be part of the community here. So I'm going to share my screen. We've got some slides to go through, but we want to try and make this as interactive as possible. So please do ask questions. We certainly don't just want to hear our own voices. So let me share my screen so we can kick off. If someone can just give me a thumbs up to make sure that's done, we're all good. Perfect. So again, thank you very much for everyone joining today. My name is Michael Roper. I'm VP of Sales for EMEA here at Irwin, and I'll be hosting and moderating the session today. We've got a great slate of speakers. So believe it or not, I've been in this industry for well over 20 years now. I've worked on the investment banking side, the advisor side, and now on the technology side. So I'm very pleased to be running the sessions today, and I'm very pleased to be hosting it. We've got a great panel of experts, and they'll introduce each other in a few moments. But we're going to hopefully bring a unique view on topics we'll cover in the next 45 minutes or so. As Paolo said, we're excited to dive into how investor relations professionals can take a real data-driven approach to things like targeting engagement. We'll explore some of the involving investor landscape trends, discuss how IR teams can leverage technology and some of the analytics that can come out of it. We'll also tackle some of the key communication challenges and share some strategies. So very much looking forward to it. Salwa, Shahroz, and Mansoor, I won't be asking too many difficult questions. Please, let's crack on with it. So before I dig in, I just wanted to introduce Irwin to people who aren't aware who Irwin is. Some of you are familiar, but some of you aren't. So Just wanted to give a bit of background on who we are. Urban was founded in 2017 with a mission really of connecting issuers with capital allocators through the medium of technology. So that's really who we are in the crux of business. The early years of Irwin was all around validation, growth, and expansion, making sure our technology from a CRM solution basis and all the things that IROs and modern IR teams want were in the platform. So that's where it takes us to today. In 2023, we formed a very much a strategic relationship with FactSet. You're probably more familiar with the FactSet name than the Irwin name, but we formed a strategic relationship with FactSet, really allowing us to create an integrated CRM solution with a market data terminal. Many IR teams operate a quite fragmented tech stack in some cases for a whole range of reasons. So this really allowed an issuer to consolidate some of this into one single solution. Now, at the back end of 2024, Irwin was acquired by FactSet, which has really allowed us to supercharge everything that we want to do, everything we've done and want to do and moving forward. So it really takes us to where we are today, which is a client base of over 700 issuers globally and very much a growing client base within the region. So we're very pleased to participate in these types of events and attend a lot of the sessions that are going on. So with that in mind, I'd like to hand it over to, first of all, Mansoor to introduce himself, and we'll go around the panel just so you get an idea of who we are and where we've come from. So Mansoor, over to you.
Thanks, Michael. Hi, everyone. It's really great to be here today, this afternoon. My name is Mansoor Elahi. I'm the Director of Customer Success at Irwin. So I lead the team that manages the relationship of our 700 plus issuer and consultant clients internationally. I'm very excited to be joined by two esteemed panelists in Salwa, Gradl, and Shahroz Hussain. Salwa, I'll pass it over to you for a quick introduction.
Thank you, Mansoor. And so Paulo said most of it, but yes, I'm currently the director of MEIRA, which is one of the two telecom operators in the UAE based in Dubai. And before that, I was managing IR activities at Airbus, aerospace and defense company. I did this for 4 years. I was based in Munich, in Germany. I have also been managing debt capital market activities, and so all the financial communication with everything around rating agencies, understanding how they work, their methodology, and engaging with them in a continuous time. Very happy to be here, happy to take your questions, and looking forward to the dialogue. Then I will then hand over to Shahroz.
Yeah, so Shahroz is saying, associate partner with the capital markets and investor relations team in Instinctif Partners. And before I joined Instinctif, I was in the north in Toronto, and I managed investor relations for companies listed on the TSX and New York Stock Exchange. I managed mining, telecom, like Salwa, and retail and manufacturing as well. And I worked with my companies to develop a world-class IR program. And I figured I may as well come to this booming region and help clients over here develop a world-class program as well.
All right. Thank you, everyone. So, agenda for today, there's 3 topics that we really want to cover, and the questions and the slides are really going to be focused around that. But one is experience around defining your IR strategy. We're going to be talking a little bit about investor identification and then the execution at the end. So how you can bring everything together to really get your messaging out there into the market. So with that in mind, obviously IR is very, very important. Otherwise, none of us would be here. So it's all around the communicating, building trust with investors, strengthening those communications, but try to engage with those investors, the right type of investors for the long-term success. So all around getting your message out there into the market. So with that in mind, Salwa, I'm going to start with you, given your background in IR. So how would you, or how have you previously gone around really defining your IR strategy? And when you look at the strategy, what time horizon do you look at?
So yeah, Michael, independently from my background, I think it's the same here or abroad. First of all, most importantly, have an IR strategy. Because with the day-to-day rush, there's smaller teams, even one person IR department, we often end up prioritizing all the regulatory compliance or having the big picture. And I think you cannot afford to neglect the strategic thinking in IR because I also feel that the job would be very boring and uninteresting. The second thing is to get the buy-in from your management. I think it's crucial to understand what your management's ambitions are, and then you align your IR strategy accordingly. Because even with the most powerful IR strategy, if you're not supported by your management, I think it could lead to a kind of frustration and just doing the daily mandatory things. And the job becomes really difficult. So get this at the very early stage, I would say, even before joining during the interview process. And I remember during my own process in the final interview I had with the CFO, he asked me, what made you not join us? And I thought, oh, it's a tricky question, but I thought about it and I thought, if you as a CFO do not have big ambitions for IR, and I'm not interested in joining because why would I leave a company like Airbus and move to a completely unknown country? I want to build something. I wanted that there is here a kind of ambition to build something strong. But on the other hand, I speak with other CFOs and they say, okay, the board and CFO is happy with the valuation, happy with the coverage. And so management teams sometimes may not need a more robust IR strategy if they perceive that there is some benefits in short-term stability. And that's fine. But I feel that sometimes maybe a bit of capital market awareness across the company is needed. And this is also part of how you define your strategy. So I get a lot of questions internally here, but also in my former job on why do we do IRs and the company aim to service its customers? And I think most people forget that the company belongs ultimately to shareholders. And so the mandate of obviously the board, because the board is representing shareholders, but also the mandate of management is to create value for those who own the company. And by value, I don't mean only financial value. Of course, there's reputation, customer satisfaction, sustainability, strong governance. So in that respect, the role of IR is to really ensure that the company's stock is valued properly. So by providing the right level of information on a timely manner and of course to the right audience. And this is where we will come with our targeting strategy. So once you're in the same page with your various internal stakeholders, including your management, your board, you can define your strategy based on what you and your management want to achieve. And so in terms of timeline, you were asking about the timeline. You need to break down your midterm strategy into some actionable yearly goals. So we'll have a long-term planning and short-term tactical adjustments. But for you to have the headspace to think strategically, because to have this kind of strategic thinking when you're in a rush, when you're alone, you have to execute the foundation properly. So all of the regulatory requirements, which are the foundation of IR. This is what I call like level 0 of IR, the bare minimum. Failing to do it properly can lead to significant consequences. So I would say ensure that you have a plan already in the beginning or before the beginning of the year for timely and accurate disclosure of your earnings, annual report, all the compliance with regulations, and have this timeline set, have the buy-in of management, meaning these kind of meetings with CEO and CFO have to be set in the beginning, and then you can start strategically. And because, of course, IR goes beyond compliance, so you have to build the trust, engage in a continuous dialogue with your investors. This is all critical to IR once you have had all the other things fixed. So this involves not only delivering financial performance, but also showing the shareholder in how you create value to your shareholder. This means that you need to understand, first and foremost, the gap between your intrinsic value, so of your stock, and the market value. So you need to use your projections, internal business plan, and evaluation model, very important, ideally based on the models used by the analysts, and you compare your stock's fair value to how analysts and the market are valuing your stock. Then you have to engage with the analysts to discuss the differences in this valuation, and this will really bring the discussion that you have with your analysts to a much more qualitative level, I would say, when you understand their thinking through their numbers, through their model, and you will understand this and you will guide the market consensus toward your stock's fair value. And this, I think, is a key role for IR and for fixing your strategy. So once you're here, you know where you stand vis-a-vis the market, vis-a-vis your management. You know how you need to talk to them because you know how they think and what you should focus on. So based on this, you will build your equity narrative. I'd rather call it narrative and not equity story, because it's really, so the story, it's what is real. And it's critical to develop this narrative based on data, market data, forecast, financial statement. And I like to insist on this accounting part, because this is the first source of information for analysts. They must be aligned with your IR communication. Everything in the financial statement should speak the same as what you have in your presentation. Clarity in your statements, consistency in your messages. It's not only an area of accounting, the numbers. You have to have a critical view on it as an IR. Have this in your strategy. You have to really scrutinize, go through everything in the financial statement, and everything has to be really, some examples I have seen. The same term refers to two different things from the financial statement, from the presentation to analysts and investors. So once you're there, you're going to want to tailor the communication you're going to do to the right audience. So you have presentation, events. You have to be mindful of in which format you want to communicate with them, when, and the message that you will deliver. So that's when you're going to prepare your annual roadmap of your activities before the start of the year. Someone in August, you're going to start thinking, okay, this is what we're going to do, how we're going to do it, who we are going to meet. And it's not about roadshows and conferences. It's about a strategic communication about various platforms. So social media is one of them as well, depending on your share base and who you target. And this is what bringing us to the part of the strategy that is knowing your share base. So you're going to identify who holds your stock. This is very important starting point. This is very different from one region to the other, because in the region here, you will have to start by analyzing your register. And do this at different points in time to understand the shareholder profile in your register. So do you have retail, institutional, and what kind of institutional investor you have? You have growth, you have value, you have hedge funds. And you're going to use this data to align your investor targeting with the goal of achieving a fair valuation. So for example, if you think that there is an illiquidity discount in your valuation, you need to integrate in your strategy something to improve liquidity by targeting the right investors. International investors, for example, can help improve liquidity and bring diversity in your share base. But also there, you need to target the right ones. So you need to strike the right balance between hedge funds, buy and hold investors. So international is not just for being international, but it has an aim as well. So you have to, for example, also understand the change in average daily volume in your share register by, again, using the data that you have. And you have to link this change in shareholder structure with shareholder structure. So you will see, for example, that there was a lot of liquidity, a lot of volume in the beginning, and all of a sudden this dropped. And you will link this with the change in your share register. So what changed in between these two periods, and what can you do to fix it? Some things are easy to see. The shareholder, just look at the shareholders not collecting their dividends. Some that have not been updating their contact details for some time. And you're going to be able to define a strategy to correct that, and possibly the local exchange like the DFM or ADX. You can also understand the shareholder concentration. So for example, you're going to say how many, like the top X shareholders hold Y percentage of shares. Or let's say you want to change the mix towards more or less retail, depending on what you want to achieve again. Stability, more liquidity, and what kind of retail, because some share books have some retail investors that are not moving. And you need to adapt also your communication and the way you speak to this type of investors. So you need to create this target list that will enable you to reach your objective in terms of how you want your share book to look like in terms of horizon, medium term, 18 to 24 months, but depending on how liquid your stock is. So these are just some examples and angles of analysis of the share book. And again, depends on what objectives you want to reach. And what I like in this is that this is a kind of virtuous circle. So that will make you achieve your goals even faster, because having more liquidity through having a better targeting will also give an incentive for sell-side analysts to cover you. And then higher coverage will be all the more efficient if you provide transparent flow of information, which in turn will improve the liquidity. Yeah, so once you want to, you know who you want to target, you create your roadmap, and you create the right channels to speak with the investors. So last but not least, I think something that is very important, especially here. I mean, it's important everywhere, but when you work in smaller teams, you actually realize how important it is, because in larger companies, such as where I was before, we had sophisticated tools to help with everything, targeting, market data, consensus, etc. But we were not using it fully because there were enough people to do things and you don't realize that you really need it. And in smaller teams, I feel that the lack of resources can be challenging sometimes. And with the right tools, you can really gain a lot of time in terms of transforming all these challenges into opportunities. So you start really the same tools that you had before, using them at their full capacity and really start appreciating them. And of course, this automation and process has to be part of your IR strategy if you want to make it.
Thank you, Salwa. That's incredibly insightful in the whole strategy setting. Shahroz, I'd like to bring you in here. Salwa talked about some of the challenges, valuations, management buy-in. Given your advisor experience now and having been on the IR side, what are some of the prominent challenges that you've seen IR teams face, and how should IROs be thinking about maybe overcoming those challenges?
No, absolutely. To Salva's point, management buy-in is the key enabler to a successful IR program. And often say that IR isn't just a check mark on your to-do list. It's a very hands-on strategy, like strategic part of your finance, in fact, corporate strategy. I agree with Salva that once you have the management buy-in, it becomes a lot more, I would say even exciting, when you have a CFO and a CEO that are excited to meet investors, that want to build a good relationship with the investors, and are happy to go to be on the road with you. So I think that is one of the key things. And if you go one level down, where to N-1 at the management level, getting their buy-in is also crucial. And that can be a challenge, because they're the ones that provide us with the information that gets passed on to the investment community, and to get their buy-in, to make them understand why this matters. And that ultimately the shareholders are the owners of the company. And we have a duty to report our results and our strategy to the shareholders. It takes time working with the N-1 management. But once they come around, I've seen great success in them being very actively involved in the IR process and getting us the information that we need at the appropriate time, and being more involved with the overall process. And then if we go into more challenges, I think in the region especially, it's very difficult to identify shareholders. If you look in North America, majority of the shareholders are required to disclose their holdings. In the region, that may not be the case. So it's a bit more difficult to target. But when it comes to targeting international shareholders, that's when it gets a bit more, I would say, easier, in fact, because platforms like Irwin allow us to look at, pure holdings and identify funds and like Salwa said, if we value stock, how do we target the value funds? And that's something I would use a tool like Irwin to target specifically.
That's really insightful. So, Shahroz and Salwa, this one's really for both of you. You both talked a bit about targeting. So when you think around the strategy and everything, and you look at your shareholder base, when you've been able to identify it, what would you see as the optimal mix of local versus international invest when you are thinking around your shareholder base?
So I would say it really depends, as I was saying, on your role, and there is not one specific magic formula or one size fits for all mix. I would say that if you want to improve liquidity, targeting international investors can help. But depending also, you have to have the capacity to do this, to meet them, to do roadshows internationally, to go there, to target the right ones. You might want to focus on local institutional investors if you want maybe more stability. But the key, I think, is to understand first the impact of each group and the impact on your valuation, liquidity, and your strategy accordingly. And then how do you target these groups? So probably different from one region to the other, but in the GCC actually depends on the kind of company that you're in. But for example, for me, in a telecom company, I wouldn't go and target international investors that are investing in telecom. That would be too narrow, especially not the ones that are investing in our peers, because first of all, there is not much public information, so the outcome will be really small, and it will be based only on the publicly available information. And second, I want to target as large as possible. So I want to look at international investors who are investing in emerging markets as the first bucket. We'll see how much that gives me. And from there, I will refine my strategy and my target list by narrowing maybe to strategies that are targeting maybe the same size of free float or the same size of capitalization. And then I can go deeper into the details. Maybe if I want to narrow it down, I'm going to a region and I want to do a specific campaign to those who are holding with public available information some telecom companies, be it telecom European or telecom emerging markets, maybe. So yeah, and that's how I've been looking at this year. Of course, it's difficult to see the outcome, and like everything in IR, you cannot say that this action that you did has a specific impact on your share growth, but we have seen some good inflow of capital from international investors.
In fact, if I may add to Salwa's point, so I was also previously in-house IR for a telecom firm, and we had the mandate from the board. In fact, we should be attracting more international investors, and Europe was a natural market for us. So we conducted a 5-day roadshow over 7 cities. It was a nightmare logistic-wise, but everything went really well, and we had great meetings with large name investors in Europe. And, over the year, we saw about $500 million worth of investment rolled in from Europe, and we were patting ourselves on the back and saying, great job. But then, the following year, there was some regulatory uncertainty in Canada on telecom. And what we saw, the European investors were the first ones to jump ship. And then when we looked into it, and the question was why, and we found out that in Europe, regulatory changes have eroded the value from telecoms, and because they've been very punitive on telecom pricing. So those investors had that in mind, and when they saw a similar story play out in Canada, they jumped ship, and they said, "Nope, we've been there before. We don't want to be there." However, the Canadian investors were more aware of the local regulatory landscape. They stood fast, and they were engaged with us and trying to understand more on how we were tackling this issue. But this really comes down to the GCC. We're fortunate to be in a region that's really gaining attention of the international investment world. We've got strong economic growth, national strategies like Vision 2030 and Saudi Arabia really driving the markets. So all of that means that we've got eyes of international investors on our companies. And, we've had a healthy momentum of IPOs. I think we're fast maturing in terms of disclosure and compliance. And all those factors help build trust in our market for the international investors. But that means that we need to be prepared for international investors, especially when you're looking at the Europeans and North American investors. They expect a robust set of financial disclosure along with efficient delivery of your key messages. And when you're competing on an international level, you have to measure yourself against peers in North America and Europe. And the investors from those regions expect a similar level of disclosure, if not the exact same, and the detail as well, to establish trust. So that's something that we've been working on, and we've had a great success. A few of our clients have seen their strategies go online, and we've had great organic interest from international investors reaching out and setting up one-on-one meetings with management, with the IR team to understand at a deeper level what's coming up next. But to that point, the example I brought up earlier, I think one of the key factors when you engage with international investors is to give them the landscape of your region. You have to demonstrate macroeconomic metrics, what's relevant to our company, and why we are in a great position to be in this region. For example, if you're a UAE-based company, you demonstrate why UAE is a great place to invest, and then you provide the relevant metrics to demonstrate how your market positioning to your advantage. And then also, I think ESG is a big factor too, especially in Europe. I recall sitting in meetings with management, and the first question they would ask is, okay, take us through your ESG strategy before the growth or the financial or anything comes in. So take us through your ESG strategy. So you have to be aligned with the UN SDG, ideally an ESG reporting framework that's aligned with the SASB or GRI standards. That's a key focus for international investors. We do have a growing team that's focused purely on ESG, given the healthy demand in GCC companies to improve their disclosure on ESG. So really happy to see that come along.
That's brilliant. Thank you. Go on. Sorry, Salwa.
And agree with Shahroz on, especially specifically wanted to add something that we've been facing, because as you know, when you target EM investors, emerging market investors, they will put in the same pool countries with various, dynamics. The region very, very diverse, and you have to show them how different the UAE is from Saudi, from other countries. And, sometimes you assume, okay, it's a portfolio manager, he knows. But we realized that in our presentation, the environment part, we really have to go through it. We have to explain the population dynamics, the GDP, inflation, the pegged currency, a lot of things that are not necessarily taken for granted in Europe or in the US. So things you have to go through. And exactly what Shahroz was saying about telecom, because they come up the mindset of European telecom. So they were like, yeah, we have seen the price increases in Europe. Why don't you do the same? Or so you really have to come with also this, even telecom experts. I don't even talk about those who don't know about telecom, where you have for every sector you have, because some are not specialists, you have to go through explaining the sector and explaining the company. But you have to come with this structure of your presentation on, depending if it specialized or non-specialized, of saying, okay, this is not the same framework, this is not the same regulator, this is not the same market, the same consumers. And so this is why this is different. Yeah. And then they will do the link with the valuation of your stock.
Perfect. I'm learning lots of stuff today. So having you guys on is brilliant. So I'm going to just hop forward. We've covered some of these as we've gone through the questions, but Mansoor, we really want to bring you in on this section, give it the data side that Irwin has and FactSet has. So when we look at types of investors, generalists, retail specialists, and so on, how does this sort of factor or should factor into decision-making process around targeting? And in terms of process, how should we think around the targeting process?
Yeah, thanks, Michael. Great question. From a process perspective, as it concerns leveraging data to target, I like to think of investor targeting as a funnels, which is what, nicely drawn funnel that you see on your screen right now. I think it serves as a good analogy, both visually and in application, for how you should think about targeting almost as a checklist. So at the top of the funnel, you have your, I would say, quote unquote, least creative and most objective ways to target. This would be the standard. Let's find who invests in our peer groups, who doesn't hold us. Let's just go after them and let's reach out to them. And then as you continue to go down the funnel and sticking with the peer group aspect of things, you can start to get a little bit more creative with how you define your peer group. So the top of the funnel, the widest part is the standard low-hanging fruit, as I'd like to call it. And then as you continue to go down, you start to get a bit more creative and a bit more nuanced in your approach. So one such example can be creating an aspirational peer group of companies that are maybe larger in market cap or size. If you're a smaller issuer, that way you can leverage that peer group to target more larger institutional asset managers in North America and globally. Another quite unique way to leverage peer, we talked about regionality. So that's definitely one aspect of creating a regional versus international peer group. But a lot of our clients that will create peer groups based on sector agnostic aspect. And so what I mean by that is typically we'll tend to just add peers from within our own sector and space, but to get a bit more creative means to maybe see if your company's revenue and risk profile matches companies that are maybe not even in your industry to begin with. And so we know a couple of examples I can think of where, a healthcare issuer client of ours would screen for similar companies with a similar revenue or risk profile. And they found that, technology peers were actually a very good fit. And so they could target using that lens as well. As you continue to go down this funnel, you get a bit more narrower. So we switch out the peer group to more quantitative data that Shahroz and Salwa both spoke about. So this is things like investor turnover and investor style, for example, or buying power for institutional investors. And then finally, kind of at the bottom end of the funnel is where you get to be the most subjective and most creative and target even non-reporting institutional investors that are, let's say, based in North America. And by definition, you won't be able to use a peer group because there might not be holding information for you to leverage. But I think it's still a relevant aspect and often underlooked aspect, overlooked aspect of targeting, because these are the proverbial diamonds in the rough that exist.
And but if I may add, I've been doing investments for over 13 years now. The process is almost always the same across different companies. There are some like small details that you can factor in, but they're, a great way of showcasing how you can target investors. The one thing I can add, I usually go a step further, and it's basically tagging investors, right? So having different categories of investors. So when I see an investor come across, I know automatically what category they fall under. And, those categories could, overweight us, but underweight peers. And there's a formula that goes behind it, compared, like taking into account market cap. So those are the supporters, or the A category. And then the B category could be investors that are underweight us and overweight peers. So they need more engagement. We understand why they prefer our peer over us. And then we have two other categories, for example, category C, which may be, this investor has no holding in us, but they are actively engaging with us. So they may be on the fence, they may be making a decision. So maybe they need to be, given a bit more of a white glove service. And then there's the final category, which I usually categorize as category D investors, which is, they don't have a holding in us. They haven't really been in touch with us, but we know that they're good long-term investors, and there could be some potential over there. So we try and hit a few of those every quarter, and to make sure, we're that they know that that can be a challenge sometimes too.
Perfect. And sticking with you, Mansoor, before I hand over to Salwa and Shahroz on this, because I'm interested to hear your thoughts, especially Salwa, because you mentioned social media. But Mansoor, when it comes to using alternative data sources, sort of make this very round, what sort of things do you think can be used potentially?
This is a great question, because I think it ties into the funnel approach that we spoke about just earlier. I would say alternative data sources will fit into the bottom end of that funnel, the very narrow end of the funnel. And there are a couple of examples, but before I dive into those specific data sources, I think it's important to take a step back and maybe understand targeting historically and maybe traditionally has been a two input game. If you want to oversimplify it, it's who does investor X cover, or what do they cover, and who do they hold? I think with alternative data, you can add a third almost question ask, which is, who are these investors researching? Which isn't all apparent, but can be a really valuable input from a targeting perspective. So in that vein, one alternative data source is website traffic, for example. And this is actually quite popular among Irwin clients, where they can leverage investor website traffic to gauge which institutional investors are visiting their website, how long are they spending on their website, what pages they're visiting, how many people from XYZ institution are visiting, and really gives them an idea of, okay, how engaged are some investors with our story, and are these investors that we've already reached out to, or are they net new ones? And by and large, it can just serve as a really nice, warm lead funnel to target potential investors, because there's already some sort of a pseudo relationship there. They already care about your story in some way. So that's one aspect of using alternative data sources. The other aspect is just more from a CRM perspective, is leveraging things like engagement scores, which is something that Irwin is also at the forefront the last couple of months, where we can serve, Fidelity is a great fit from all of these, sector, subsector, holdings perspective bases. But are they actually meeting with companies like you, or are they meeting with companies in your space or in your region? So I think those two elements, both the engagement score for the engagement data that can give that peer lens, as well as, website traffic data, for example, can be a really nice, unique alternative data source to potentially target and leverage data to target the right investors.
Great. Salwa, Rose, I don't know if you need to add from your side.
We cannot not mention AI in all this, and this will probably the next trend, probably in targeting. Probably does exist already. Of course, not yet using it, but I can imagine from what Mansoor is saying, Shahroz, some combination sources that will provide you with a kind of list based, the traffic, based on the score, based on how underweight, overweight they are in the sector, and we're looking forward to see things like this. It will also more our jobs much.
Absolutely. So I agree with an AI. targeting tool will be a game changer. Hopefully Irwin is taking note and we can see something in the near future.
Watch this space. Conscious of time, so let's move on to the final section, which is all really around the execution, the creating the clear, the compelling message, and those sorts of. Shahroz, I'm going to start with you on this, given the both sides of the coin that you've operating or currently operating on. So, what are some of the recommendations you have for issuers to develop a proactive outreach strategy for the international investor community specifically?
Absolutely. We've gone over a few points. I'm a strong advocate for proactive outreach, right? As opposed to a reactive investor relations program. And this includes, of course, one-on-one calls and meetings with investors and analysts after you've announced your results and other major material announcements. For example, after earnings call, I like to reach out to the top 20 investors and all of our sell-side analysts and offer them a one-on-one call with a CFO, or if the CFO is not available, with the IR team. And I've even seen the CEOs participate in these calls. It's a great way for the analysts and the investors to ask more detailed questions that they may not be able to ask on call. And above all, it builds a great relationship with the management and establishes trust. Speaking of the sales side, companies should always be proactively explaining any reporting changes or detail, let's say an M&A announcement that you're acquiring an asset. You want to go through the synergies and how you realize the synergies. And I've seen companies hold analyst sessions on, for example, IFRS updates on accounting changes. And I've seen analysts love those sessions. They come out with a very good understanding. And at the end of the day, they all publish reports that are aligned with our messaging and portray an accurate picture of what we are trying to get across to the investment community. So that's a huge benefit, proactive outreach. And then also speaking on hosting, attending and participating in an event as part of the proactive approach. Attending and hosting events allows investors to engage with management, right? And that's invaluable. There's no price to that. And these events can range from non-deal roadshows to investor conferences, to investor days, site tours especially, and even a sales desk presentation, which we're a big component in North America, but I haven't seen them over here yet. Going to site tours, I feel like that's a great way for companies to showcase their assets. And it displays a real sense of pride, which is infectious. I've seen investors come with doubts and then leave with a smile on their face after seeing a mine, which is not particularly interesting, but our job is to make that story about that mine interesting and showcasing the talent, the people on the ground that are actively working over there. And of course, it allows more one-on-one time with management. It gives the investor a window into how the company is being run. And I think that's absolutely crucial in building your trust with investors. And I use the term trust a lot, and I really feel like investors are ultimately partners with us in the business. And that trust is the key factor that keeps the partnership intact.
Totally
Yes.
agree. I'm thinking also about the site tours that we used to have at Airbus, and the analysts that were like kids looking at the A380 and
Exactly.
So yeah, it was very helpful. But yeah, as we were saying, trust, it takes time, but you can lose it very quickly. And so in this respect, this is also something that I'm experiencing here in the region. One important thing that I realized is we have to make sure that the communication, that we speak with one voice in the company. This is still sometimes a challenge because there's like silos between the corporate comms and IR. They still don't understand why we should work together, why we should be aware of everything. And this is something, of course, when in a bigger, I mean, not it's not about the size, it's the processes and where IR is established since 20 years. I think you can very easily lose trust because your corporate costs, because some information go out that are not in line with your equity narrative. And so this is to work on in the region.
Absolutely. I think that's key. Like we need to do what we say we'll do. And we need to, when management, facing the investors with the commitments that they've made, they're more mindful of those commitments and more likely, stay on track based on those commitments. But I still believe that management, we know the company the best. And that strategy can change overnight. I've seen it happen. But then that's where IR comes in. A good IR program would ensure that investors understand why the strategy has changed, given certain dynamics in the market.
So I got one follow-up question for both of you on this. So you talk a lot about trust and building trust. So in terms of international versus regional, do you see is there nuances between how you go about building trust with the different type of investor or a strategy around building the trust?
I think there's one thing that I always maintain, that the currency of trust is transparency, right? And that's where I feel a lot of companies in the region are falling behind, is in terms of their disclosure. We're actively working with a few of our clients in improving their disclosure. We're looking at international companies, aligning those metrics internally. And, sometimes those metrics aren't even looked at internally. So we need to build that capability internally. So it's a long and strenuous exercise in all sides of the business, from the operations to the finance. So we can have a solid disclosure that we can use to tell our story, or narrative, as Salwa likes to say.
Yeah, I would say, you have to build trust with all your investors. I wouldn't make any difference between if you're a local or international. I would, be transparent, use the KPIs, the transparency, and you benchmark yourself with the local POC. Okay, the KPIs that they're using, they're not using, I'll give you an example, free cash flow, but something like a proxy of it. You want to benchmark yourself with the best in class, wherever they are. And then you will build your communication on that way, having the guidance, having maybe an outlook, having a capital market day, and all these good practices in terms of communicating, in terms of having the level 0 is having an earnings call, but having your earnings call publicly available, having a webcast, having a transcript available, which is still not given in the region. And I think our investor will start to appreciate it, and will start making a difference between those who give this information and those who don't give it, even if they were not used to it before. So there is going to be also competition of the quantity of the communication out there. And this is where a strong IR in play. I will drive maybe everyone towards a high level of transparency. Yeah, be it international for international or for local.
So we're coming up on time, and this has been incredibly insightful across the board. I've got some other questions. I could probably sit here for another couple of hours picking up on things, but with a few minutes left, what we'd like to do is open it up to the floor to see if there are any questions from the attendees today that certainly I won't be answering. Shahroz and Mansoor and Salwa were the experts here. So I don't know if anyone has any questions, if they'd like to ask any questions.
There is only one question I see that I'm not sure it has been already answered. And if it is, I'm sorry, because I picked up a phone call while you were speaking. Have you considered liquidity providers? Has this question been answered already?
No, that hasn't.
Right. This is a question from Nad Mokbel Gulf Nav. I think this is a question probably for Salwa.
Something can be, as I'm saying, you have to first identify the issue, even the liquidity issue. What is the reason behind the liquidity issue? Analyze your share book, analyze whom you want to target. Maybe you would find an easier fix to this than hire a market maker. I am not a big advocate of, because I've never done this in the past, and I believe that putting water on the sand, so you create a bit of liquidity, and then if you don't follow up with this, maybe it could trigger a bit like a starting point. But I don't think this is a fix for the liquidity issue. The fix is everything we've spoken about before, is knowing who your shareholder are, knowing who you want to target, and how you fix the structural reason, the lack of liquidity.
And I agree with you so well. Like I'm not a fan of liquidity, paying for liquidity. I managed in-house for a small firm, and liquidity was a challenge for us. A key source of liquidity is retail investor, right? So are you engaging a retail base? Like I know the North American markets, I'm not aware of the stats over here, but about 70% of your liquidity comes from the retail space, and they're often overlooked. Do you have an active liquidity program? And then also the type of investor you, right? So hedge fund, they're not great long-term partners, but they can be useful in creating that liquidity, right? So I usually don't engage with hedge funds, but if there's an, for them to come on and provide some liquidity, then that's something that, that you could look into as well.
Okay.
Any other questions?
I see how would you suggest engaging with the target that's overweight on your person and underweight on your company? Essentially, usually they're, if you can speak to them, and usually these companies and these investors are very transparent on why they prefer a company over yours. It may even they pay a higher dividend and we like that dividend play. A company does not change their dividend policy based on what the investors seek or on the fundamental of the company. So it may be something that you can't do anything about, or it may be, we've been holding it for a long time. We like the strategy. We believe that they'll outperform your company. That's where your window opens to engage with them on your own strategy and how you have an upper hand against your peers, showcase your past successes, and just allure on your investment thesis. And over time, hopefully they can convert.
All right.
Perfect. Precisely,
right.
Sure. I think you indirectly answered my question. I wanted to understand how to engage. So perhaps you can communicate through if we can reassess the strategy or we can get to your
But I said
strategy, how, yeah. So that was very interesting. Thank you. Thank you so much.
Most welcome.
I think there's one more question again from Nadir, and it's it's a general question. So how often do you and the CFO review the annual strategy or progress of the deliverables during the year? So Salwa, I think that's really for you.
Of course, the strategy is reviewed many times a year. We have a strategy retreat, and what Nader means by the deliverables, he means how important IR is for our management. I'm very lucky, very, very important progress on deliverables, or maybe it's the deliverables for the strategy, you mean. But I would say on the IR side, the way to engage with the top management is through feeding them with management and the board, actually, not only CEO and CEO, but everybody in that level, including the board, show how important it is, the outcome of it, how you have reached your KPIs, whom you have met. Okay, I see that now that it's specifying deliverable for the strategy. There are 4 milestones that are followed up. I'm not very much involved in this one, but from an IR perspective, of course, I'm interested in how we are progressing. So we have a strategy that is set, and then we are communicating with our investors on how this is implemented. And yeah, management is, of course, following it because there are, of course, targets that are set and a set of KPIs for the performance of the company that are linked to the execution of the strategy. Yeah, I would at least twice a year.
And
But it's probably varying from company to the other, I would say, because a telecom company that is quite mature in a market that is mature is not the same as, I don't know, maybe a different type of company that have several strategic changes because of new technologies, because of the new environment. So I would say this varies, but at least twice.
yeah, and I've had this debate throughout the years on what are the KPIs for but I'm mindful of them.
Yeah.
Is it okay if I take another 2 minutes just to go through the KPIs?
Yes.
That's okay.
Yeah, please do. Let's go.
And so yes, like Salwa said, it starts with who you are, right? Are we a junior company in a crowded marketplace that's looking for liquidity, or are we a large blue chip, or are we somewhere in the middle? Do we want to increase our shareholder concentration, or do we want to diversify our shareholder base, or do we need to increase our volume, or do we need to manage volatility in the stock, right? So all those factors, you first need to look internally and then develop your KPIs. You get a 30,000 feet view of the company and then define the details of how you'll achieve that, like in those areas. Personally, I'm a big fan of investor touch points. So I mentioned the categories of investors. Should we be talking to category A investors X number of times during the quarter? Or how many category D investors should we be speaking to? And then they can also take the shape of, for example, 2 investor conferences per quarter or 1 roadshow per quarter. And then also a key thing that IR teams miss is how effective do we capture investor feedback and present that to management? Or how effectively are we managing the CEO and the CFO's time in having high impact? I'm not a big fan of big group meetings. I prefer having more one-on-one targeted high impact meetings. And also management readiness is a great indicator of a successful IR program. Is your CEO prepared when they face investors? Do they have the profiles of the investors? You know what were the key concerns the last time we spoke about with that investor? Are they prepared with the key facts and the messaging to convey to investors, right? Do they have the context of why the investor is meeting us? So at the end of the day, it's a mix of qualitative and quantitative factors that define a successful IR strategy. I always give this one piece of warning is steer clear from any promises on share prices. That's beyond IR control. We do not control the share prices. We do not inflate share prices. That's not what we do. We ensure fair valuation, yes, but we do not control the market. I always advise my friends in IR who stay on making promises on share prices.
That's a great comment, probably to conclude, but I completely agree with you on the share price. Definitely not a KPI. However, I've seen this and been like challenged on this.
Yes.
I'm happy with this because our share price was up 44% last year. I'd say, there are things that are beyond our control. There are so many ways, as you were mentioning, so many KPIs that we can link and where we see the impact driving the consensus towards your guidance, to your narrative, and everything you said about making everybody ready and properly prepared during the calls, which are more like kind of operational things, but very important. So we have to be on the full spectrum of kind of KPIs. From the very operational ones, how many questions were we able to answer in the Q&A or the earnings release? So the super strategic one, how you could manage your share base, how you reshuffled it towards your objective, but definitely not the share price.
Yeah.
Amazing.
I think
And
we
it
are
brings to
coming to a
brings a few
close.
extra time. Yeah, we pinked a few extra minutes, Paolo. So thank you very much.
No worries, no worries. So thank you for joining us today. Thank you for our amazing speaker. Wishing everyone in the region a good Eid break, and we'll see you next week. And have a good weekend as well.